As an investor, it is important that you're very cautious during the saturation stage, because normally this is where most investors make their mistake and buy too high. So let's begin with the first phase. The first phase is what I call the beginning of saturation. The days on the market increase, supply increases, speculation is still very high, and novice investors begin to grow in the marketplace. The turning point of this stage is what I call the dangerous saturation. There's overbuilding in the marketplace, material demand grows, jobs slow down, creative lending is very prevalent to get people financed, and you will also notice that in the front of the news, they're always talking about the growth in the real estate market. During the saturation stage, you must be very cautious because, again, too much inflation is in the marketplace and it's unstable. So the first thing that I would recommend you do is hold, because it's going to be a time to hold. If you must sell, then sell. However, the best thing to do is to hold your properties. Be very selective with the opportunities that are presented to you. Only buy cash flow, and again, make sure that you have a higher vacancy ratio that you're analyzing to make sure your numbers work even then. If you have existing properties, you want to make sure that you create strong incentives to absorb the vacancies that you are already facing. And keep your eyes directly on the 4 indicators that we talked about earlier to make sure that you're watching the trend go down.